Joe Zinkas from New Home Notebook and YoChicago, and I'm here with Michael Sato on my left and Chris Feurer on my right, and they are the new owners of Jameson Real Estate. Let me ask you both to comment on a few topics. First, for the buyers who are still out there, how are you telling them to cope, adjust with this market?
Well, it's interesting. Now that we're in the bigger picture role, we've been looking at a big picture a lot, and we just did an analysis yesterday, starting with the 1940s until today. So you got a 68-year history of real estate, and the real estate market, as an average, a country average, has only dipped twice in the whole history of real estate. And you just talked about earlier, development back in 1979. It dipped from 81 to 82. So the average home price just painfully dropped, and as our partners here, Harry and Charlie, who are been around for a while in the business, they told us back in the 80s, it was December of 1980, Christmas time, prime rate went to 20%. So what spurred?
It actually went to 20 and a half, and I was paying 2 over on my construction loans.
Now that'll hurt you. That'll hurt you.
No, it hurt my lenders.
Yes, it does.
I didn't pay it. Hurt my lenders.
Understood. That's what a lot of people did, I'm sure. 22% is not fathomable. So in any event, it dipped from 81 to 82. There was an actual price drop on the average, and then it also dipped from 92 to 95. Other than that, it's been a constant swing up. And it did specifically illustrate that every 12 years your house doubles in value, even with a dip. It doubled in value. That was the average over a 68-year history. So what we would tell people is simply that this is a dip, and when there is a dip, there's obviously a rebound. You have hundreds of thousands of people that paid more than you will pay, and the rates are historically low. The other key factor is that if you're selling your place right now, and you might take it into chops a little bit, you're gonna take a bit of a hit. If you thought you were getting $475 last year, you might get $460 this year. But most people move up. Most people go from $460 to $800. And proportionally, if you go to $800, they're gonna take a 5 to 10% hit on that $800,000 home. So you actually come out ahead.
People taking a hit, probably only if they bought recently, aren't they? If they bought 6-7 years ago, they're probably still ahead of the game.
Absolutely. When we say hit, it's all relative terms. It's all money on paper. It's a hit from what the price was last year to this year. But if you didn't sell last year, what's the difference?
I mean, we're still finding that purchase priced compared to the list price is still in the 90%. I mean, we're not seeing 20 or 30 or 40% off the prices.
Yeah, so it's running 96, 97.
Yeah, it's still very, very high. I mean, I think the key to that is that listing brokers are now listing their properties closer to the right price versus adding in 50,000 and hoping that they're going to get this great number, like in the 2, 3, 4 years ago. That's not happening now. So that's one good point, that prices, list prices are a lot closer to where they should be. In some cases, they're actually below where they were even a couple of years ago, 2 or 3 years ago, just because of the seller situation. Some have to get out. So there's some really great buying opportunities right now. Interest rates are still very solid. And what we're finding is that there's actually the good product out there, there's still not a lot of it. There's a lot of product in general, but the good product, it goes very quickly. There's a lot of things that have been on the market for a long, long time and still will continue to be on the market for a long, long time. But the good stuff that comes on, price right, it goes very quickly. We're even seeing 2 and 3 and 4 offers on the same unit. Also, there are a lot less new construction starts going on right now. So there is eventually going to be a time when the market catches up and there's going to be a great buyer demand and less inventory to purchase. So you take some of those ideas and some of those concepts, and we're actually getting some action in the market, albeit it's a little bit lower than what we've anticipated or what we saw in the past, but it's still, it's still active out there.
Let's, I think you raised an interesting topic, good stuff. That's what everybody wants to know. What is the good stuff and where is it?
That's a $64,000 question. Once a week we get asked, what's the hot area? And that really is not an accurate question any longer.
Saying there isn't any.
There is no hot area. What we found is the product that's out there is a bit of a spillover from 05, 06. 05, 06 was boom times, everybody knows that. A lot of this product was being built during that period of time, and most of it sold, but the product that's on a L-track or on a busy street, or it just doesn't have the right view, or whatever, it doesn't have the amenity that that particular price point needs in order to get that price point, they're not going to sell. So you've got a bit of a glut out in the market of product that really isn't very good. It doesn't match what the buyer's willing to pay and the amenity they expect for that price point.
I think to go further on that, a lot of the buyers right now, they don't want to do any work. They want a crisp and clean unit to purchase. And we're finding that the places that are 5, 6, 7, 8 years old that haven't been well maintained and maybe aren't up to date with some of the things that have been redone recently, or a new construction, let's say, and the price is very competitive regardless of if it's 8 years old or brand new, people are going for the things that they don't have to worry about putting money into, fixing up.
Is that going to drop the prices for the older product to stay competitive, or are people just going to wait it out?
I think it's a combination. I think we're seeing people waiting it out. I think we're seeing people renting, their units out and keeping it as a whole. So there's a couple of things going on there.
Most people are taking their unit off the market.
Yes.
There's a lot of people just taking it back off the market. It's not time for me to sell, I'm not doing it right now.
So the sellers have the ability to be patient and to...
It does appear to be a good majority of them do have that staying power, which is a good feeling out there.
That takes some of the edge off the buyer who thinks that the market hasn't bottomed yet, doesn't it?
You would think, wouldn't you? It's the common perception of the buyer now, when they get into the market, they really get a reality slap. The first 3 weeks they get on the internet and they do their own research and they eventually start working with a broker. They all come in with this misconception that I'm going to get 30% off the price, whatever it may be. And that's usually where the first offer comes in. They end up falling in love with the home, they offer 30% less, the home sells to somebody else, and then they become a real buyer. So what we're finding is basically there's a mental shift in the buyers, and frankly with the sellers too. They don't realize when they jump into the market either. They read the paper last year and knew what their neighbor got for his home, and they can't get that exact dollar amount anymore. Not only do they want the same dollar amount, they want a little more because it's a year later.
You guys are talking straight to me and giving me pretty blunt advice for buyers and for sellers. It seems like, has the brokerage community adapted to the circumstances, or are people...
That's the rub. It's something that most brokers in this market haven't been around for more than 10 years, so they haven't had to go through this downtime. So it's a bit of a shock for the brokers in the industry in general. We really felt like this was the perfect time for us to start a new company.